students, you are now welcome to the new session of partnership, new accounts. We are going to study, right? This is the partnership accounts. Features, normally, what is the partnership? Partnership is the business. Uh, few people get together and carry out a business with the intention of making profits, right? That this they may carry out this business up to a specific period or up to unspecific period, right? So the partnership normally governed by the uh, Partnership Ordinance Act of 1890, right? This is the act says in Sri Lanka, right? In India, Partnership Act 1932 is governing the partnership. That is in India 1932, right? Partnership Act. Here 1890, very old act, which was established by the British government. We were under the British rule at that time. These ordinances were passed in the then Parliament. So still we have not made any make any adjustments or any other uh, amendments to this ordinance, right? Still it is there, but for the Companies Act we have repealed the Companies Act in 2007, right? So that is we have done, but partnership still we haven't done, right? So as per the Partnership Act 1890, it says minimum two people needed for the partnership to carry out a business. You need two people to carry out a business. Minimum two people. Then only the word of partnership will suit. Otherwise, if there is a single person, that is sole proprietorship, right? That is sole proprietorship. So minimum requirement is two, right? Maximum you can contain 20 partners only. Maximum number is 20, right? 20 people only can be accommodated to the partnership. If there may be a question may rise, right? Why? What about if 21 people are there, or more than 21 people? Yes, of course, you have the way to do the business, not by registering under the partnership. For more than 21, you have to go for the incorporating a company, private limited company, incorporating a private limited company under the 2007 Companies Act, right? Under the Companies Act 2007 in Sri Lanka, right? So this is the limitations are here. These are the limitations, and these all governed by the Partnership Act of Sri Lanka, 1890. Agreement to do the partnership, you should have some sort of understanding or agreement, right? Agreement should be there. The agreement can be oral, by word of mouth, right? It is oral, or in written form, in writing, written form. Number two. Number three is implied term. And implied means by the way of action, by the way of action, or by the way of action, the general public, the customers, and the third parties may assume that these two are partners of the company, right? By way of act, right? That is an implied term, right? By three ways the agreement can be made. Lawfulness, is it legally recognized in front of the law as a person, right? As a person. The partnership is not legally recognized as a person in front of the law, right? Understand that. We are individual people. We are normally recognized as a persons. You and I normally recognized as a person in front of the law. Sole proprietorship not recognized as a person in front of the law. Okay, and partnership also not recognized as a person in front of the law. But saying that, but the companies, limited liability companies, are recognized as a person in front of the law, right? Limited liability companies are recognized as a person in front of the law, but the partnership not recognized as a person in front of the law. Okay, understood? Who can involve in the business in the partnership, right? You have set of partners, and the question arises, who can involve in the partnership activities? That is, one of the partners of the partnership or all the partners of the partnership can carry out the day-to-day business activities. Okay. And other thing is liability. Liability of a partnership not limited, right? Liability of the partnership is not limited to partnership. Likewise, the sole proprietorship also, not liability is not limited to sole proprietorship. It is unlimited. Liability is unlimited. Partnerships liability also unlimited. Whereas if you can study in later in companies account, companies limited liability companies liability is limited to the amount invested in the company, right? But in the partnership and the sole proprietorship, individual partners and owner has to bring his own funds to settle their liabilities which were arisen during the business activities, right? if the company become insolvent, finish. But if the partnership become insolvent, if the sole proprietorship become insolvent, the partners and owners have to bring their own funds and put it to the partnership in order to settle the liabilities. Okay, that is what they have said here. Liability, these are the features, right? Features. And other thing is business registration. Sole proprietorship and partnership has to register their business under the section 6 of 1918 of registration of Businesses Act, businesses name, right? Registration of business names ordinance, registration of businesses ordinance. Okay, this is what, this is also governing the partnership. Section 6 of the 1918 Registration of Business Names Ordinance Act, that covers sole proprietorship, okay, and partnership also, right? So he had to register under the, your name of the partnership has to register under the section 6 of the 1918 of Registration of Business Names Ordinance. Okay. The in the partnership they say if the capital of the partnership or the investment of the partnership, the person who brings, is more than 1000, if it is more than 1000 rupees, the partnership's agreement has to be in writing. It should not be in oral, it should not be in implied term, right? It should be, that is 1840 partnership or section 7 of the 1840 prevention of frauds ordinance, prevention of frauds ordinance, section 7, section 7 of the 1840 prevention of frauds ordinance says, under that, because of this act ordinance, you cannot enter a partnership, you cannot do a partnership if the capital go beyond 1000 rupees, because in 1840 the 1000 rupees is a bigger amount. Can you understand? 1000 rupees, 1000 rupees is a bigger amount, whereas in 2025 24 the 1000 rupees is nothing. Because from here you can see, from 1840 onwards till now, the law has not been amended in Sri Lanka. The laws are not amended in Sri Lanka according to the developments taking place in businesses and according to the inflation taking place in Sri Lanka, within the country, right? In, if you take 1840, inflation is very low. Maybe the salary for a person may be 50 rupees or 20 rupees per month, right? So this, because of this ordinance, there in Sri Lanka, I don't think there won't be implied partnership or under the oral agreement. There won't be, because now you cannot start with the partnership business with 1000 rupees. Understood? Hey, to, if you want to buy a one loaf of bread, you had to pay 150 or 140. So how you can start with the 1000 rupees of partnership? No, no, it is not possible. That is what I wanted to tell you. Other thing is types of capital account, right? In partnership, the partnership can be carried out under two types. One is, the capital account can be maintained in two ways. One is fixed capital account. You can maintain a fixed capital account. Number two is, second method is fluctuating capital method. Fixed capital method and fluctuating capital method. capital method. I should put method here, right? Fixed capital method. Good. Right? Instead of accounts. Fixed capital method. Okay. Right? Method of another fixed capital method. Your capital accounts will be fixed, that there won't be any changes, it won't vary, capital balance will show as it is for a long time, maybe for 5 or 10 years, until the partners decides to increase their what you call the capital, or decrease their capital, or if they want to bring the capital according to the profit sharing ratio, right? So in that situation only the fixed capital will change here under the fixed capital method, right? Under the fixed capital method you will maintain two accounts. That means one is capital account, that will be fixed there, it won't vary. Number two is current account, partners current account, partners capital account, that is fixed, partners current account, and two accounts we will maintain. Under the fluctuating capital account we will maintain only one account, that is capital account, you will maintain one account, right? You will maintain one account, that is capital account only. That is capital account, right? Here you will maintain two under the fixed capital method you will have two accounts, that is fixed capital account and number two is current account. Second one is fluctuating capital method, that is one account only you will maintain, that is capital account. Okay, that is the difference. The two, under the fluctuate fixed capital you will maintain two, fluctuating capital means everything whatever the except the capital, other partners activities are recorded in the current account here, right? Under the fixed capital method. Under the fluctuating capital method, capital also will be there in the same account and all the partners activities also entered in the capital account, only one account. Because of that it's fluctuate, right? In the partnership what we do is we used to have partners, no, profit and loss appropriation account, that is the extra account we used to have here. Partners capital account, and current account, and profit and loss appropriation account. Here in profit and loss appropriation account we used to take whatever payments we have to make to the partners salary, for the partner whatever the salaries or commissions we make payments to the partners, and interest on capital we used to pay, right? Interest on loans we have paid to him, partners only. All this profit and loss appropriation only consists the partners transactions, right? We do not record these partners related transactions in profit and loss account, right? We have to exclude it from the profit and loss account, and we have to take the profit and loss account, profit and loss accounts profit to here. We used to bring it to net profit as per profit and loss. We used to bring here. Yes, right? And if we make a interest, if we charge an interest payment on drawings, right? If the, because we are paying interest on capital, right? If that is the case, if the partners do drawings, we can charge a interest on drawings. That interest on drawings will be shown under the credits, under the credit side, right? We have shown under the credit side. This is as per net profit as per profit and loss, that we used to bring it from the profit and loss account. This net profit we used to bring it here, right? And interest on loan from partners, salaries and commission, interest on capital account, right? Any reserves we decide to transfer to balance sheet. If we want to have a reserve fund, then the provision for the reserve fund also we used to make the provisions also through the profit and loss appropriation account, not from the profit and loss, right? So transfer to the reserves account also will be there. And the balancing amount will be the profit. If it is on debit side, that is profit transferred to the capital account, right? We used to take these profits and transfer to the relevant capital accounts, partners capital account. If there is any three partners, if you say A and B, A, B, C, if you say 3:2:1, the profit sharing ratio, in that case we can share the profits when we are transferring. If you say 60,000 is the profits, right? Then A will get 30,000, B will get 20,000, C will get 10,000. These profits will be transferred to the capital account, right? This is the picture of the partnership accounts. Simple explanation. Simply I have explained to you what is partnership account in such a way to understand easily, right? This is a format of partnership also I have given here. Just you can see this, right? And everything is I have covered here, right? In next session we can see capital account and other matters we can deal with in next session. I hope you would have understood all these things, and if you want you can take this down, right? If you cannot see profit transferred after the transfer to reserve account, there will be a step profit transferred to partners, right? Profits transferred to partners will be there in down. If you cannot see, you can write it down from here. After interest on capital, there will be a transfer to reserve account is there one, and next one is balancing amount, profit transferred to partners account, profit transferred to partners capital account. Okay, that's all. So I hope to meet you in next session. Thank you for joining.